Today we begin a discussion around Reps and Warranties Insurance. This is the first in a series of videos on Reps and Warranties Insurance, which is a form of transactional liability insurance coverage. Transactional insurance is a valuable tool in mergers and acquisitions to help buyers and sellers facilitate transactions and offset certain liabilities to insurance companies. Let's start off with some basics. So what are Reps and Warranties? Representations and warranties is a section of a purchase and sale agreement used to facilitate the sale of a company from a seller to a buyer. It's a set of statements made by the seller regarding the condition of the company they are selling. These statements can be things like, the company is not engaged in any litigation, or there are no undisclosed liabilities. Things like that. This portion of the sales agreement is what the buyer relies upon to be true and accurate, and if the seller breaches these statements, the buyer can seek indemnification for the cost of that breach from the seller. While the representations made in a sales agreement are statements of fact, it's really a negotiated allocation of risks. Which party is willing to take on which risks in a transaction and live by them, and if wrong, will pay for those misstatements. Now that of course is an oversimplification of the Reps and Warranties section of a sales agreement, but it gives you the basis of what comes next. When Reps and Warranties Insurance is used in a deal, the insurance company steps into the place of the seller to fund those indemnification requirements if a breach occurs. In the middle market, about half of the private deals done are backed by Reps and Warranties Insurance, also known as R&W Insurance. That percentage is likely higher when a private equity firm is involved on either side of the deal. Why is Reps and Warranties Insurance used in a sale of a company? As I said before, sellers assume the risk of potential liabilities which occurred while they own the company but are only discovered after they sell the company. If those liabilities cause financial damages to the buyer is going to seek recovery from the seller. Sellers, especially in the private company market, are often forced to escrow funds for a period of time to guarantee the security of the representations they've made in selling their company. But what sellers really want is the proceeds of the sale of their company once the transaction closes and be done with it. They don't want long drawn-out escrow arrangements or the potential for a portion of their proceeds consumed by litigation or disputes. By purchasing R&W Insurance, much of this is resolved and the risks are transferred to an insurance company. R&W Insurance can also help smooth out the transaction by simplifying the buyer-seller negotiations around Reps and Warranties, and the buyer has reduced credit risk since any future claims are asserted against an insurance company rather than the prior owners of the firm they purchased. In the next videos, I'll talk more about other features of Reps and Warranties Insurance and focus more on the small and medium-sized business market, which is mostly underserved when it comes to Reps and Warranties Insurance. Have any questions regarding Reps and Warranties? There's a link in the description box below where you can book a call on my calendar. Let's set up some time to chat. Thanks.